Hi everyone, I'm Andy, and this is the AI Breakdown. Welcome to your weekly news edition, where I'll cover what happened in AI last week, why it matters, all in about 15 minutes. Let's start with OpenAI because they've just launched something that's very clearly aimed at becoming the default way businesses deploy AI agents, a new enterprise platform called Frontier. The basic pitch is simple. You build, deploy, and manage AI agents that can do real work across your organization and do it in a way that plugs into your existing infrastructure. OpenAI is also talking about Frontier, like it's giving agents the skills you'd expect from a new human hire. Things like shared context, onboarding, continuous learning with feedback, and defined permissions, so they can operate across workflows rather than just answering one-off questions in a chat window. OpenAI says early adopters include HP, Intuit, Oracle, State Farm, Thermo Fisher, and Uber, with dozens more testing what it calls cross-department AI co-workers. The quote that jumped out at me came from State Farm's Joe Park, who said, "Partnering with OpenAI helps us give thousands of State Farm agents and employees better tools to serve our customers by pairing OpenAI's Frontier platform and deployment expertise with our people. We're accelerating our AI capabilities and finding new ways to help millions." So this is OpenAI planting a flag in enterprise and doing it in a very operating system for business way. And it's a direct shot at Anthropic, which has been deriving a big chunk of revenue from business clients. The fight isn't just about the best model anymore. It's about who owns deployment, governance, and the messy reality of rolling agents out safely at scale. Anthropic, meanwhile, has come out swinging with Claude Opus 4.6. And yes, the headline feature is its large context window. It's got 1 million tokens in beta, which is a big step up. But the more interesting bit for me personally is how explicitly Anthropic is aiming beyond coding. They say Opus 4.6 is optimized for knowledge work, so doing things like generating Excel spreadsheets, PowerPoint presentations, financial analysis, and long-form research synthesis alongside code. They're also claiming faster output and better reliability on long-horizon tasks, with the bold line that it can finish multi-day coding or analysis projects in hours. And then there's the new Agent Teams feature, which is currently a research preview inside Claude Code. The idea here is multiple AI agents collaborating, for example, one that extracts data, another that writes the report, coordinating automatically. So basically, a divide and conquer model that looks a lot like how an actual team works. Anthropic also says this release went through its most extensive safety testing so far, including enhanced cybersecurity evaluations and better refusal handling for dodgy requests. In my view, the large context window and multi-agent coordination are both pointing at end-to-end business processes, and competitively, Anthropic is clearly trying to go toe-to-toe with OpenAI's GPT-5 series, even talking up cases where it outperforms GPT 5.2 in real-world evaluations. Sticking with Anthropic for a second, because they also rolled out something much more practical, custom plugins for Claude Cowork. Cowork is their newish business user assistant platform. It's a more user-friendly sibling to Claude Code, and now enterprises can add plugin extensions that basically program Claude with company tools, data sources, and rules. These plugins can handle departmental jobs like drafting marketing copy, reviewing legal documents, dealing with customer support queries, or analyzing sales data. And the clever bit is that admins can specify which internal databases or apps the AI can pull from, define steps for critical processes, and even set up /command triggers that employees can use. Anthropic also open-sourced 11 of its own in-house plugins as templates, and it's making a big deal of the fact you don't need much coding knowledge to modify or build new ones. Their product manager, Matt Piccolella, summed up the goal saying, "Really, what we're doing with this launch is just bringing plugins to Cowork and giving them that kind of user-friendly, UI-centric flavor that will allow the maximum number of people to use them." For me, this is important and represents the unglamorous, high ROI side of enterprise AI, not just having a powerful model, but tailoring it to real business workflows so that your teams get something genuinely useful. But remember that governance is going to be key here. The moment you give agents access to live systems through plugins, You need to be on top of permission controls and auditing. But overall, it's a very sane step towards making AI useful to non-engineers at scale. Now, let's zoom out from models and tools to the money, because the spending numbers last week were properly eye-watering, and investors did not love it. Reuters pulled together the scale of what's happening, and it's basically an AI spend and splurge of more than $600 billion by the biggest tech firms in 2026. To put that into perspective, that's nearly $2 billion spent every day on AI. The two big headlines are Amazon saying it plans $200 billion in CapEx in 2026, and Alphabet signaling its CapEx could double this year, both heavily driven by AI data centers and chips. The market reaction was spiky, and analysts have dubbed it the SaaS-pocalypse, due to a massive rotation out of traditional software into AI infrastructure. Alphabet's stock fell around 8% at first before recovering, and Amazon dropped around 7% on the CapEx news. Meta dipped too, though less dramatically. And in one of those moments that tells you exactly how Wall Street thinks, Nvidia surged 7% on the same news, because if everyone's buying shovels, the shovel seller tends to do alright. What I found even more interesting is how the fear spreads. There's reports that investors also rotated out of traditional software and data companies on disruption fears. It mentions Thomson Reuters seeing record one-day drops, London's RELX falling about 17% over a week, and Indian software exporter stocks losing $22.5 billion in value in a week. Andrew Wells, CIO at Sanjak Investments, basically summed up the vibe saying, "The market's viewpoint is that the AI build-out trade got too pricey, pulling forward all these potential future revenues and not really pricing in the risk. It's not that the trade is over, but it got too pricey, so it's a de-risking trade." So whilst this kind of CapEx wave will accelerate what's technically possible, more data centers, more chips, more AI everywhere, it also changes the competitive landscape. If the giants are building an intelligence layer into everything, smaller software companies need to be crystal clear about what they do that a general agent can't just automate away. And in the short term, investor expectations are getting less forgiving. On the monetization front, Google made a move that I think we're going to see repeated across the industry. It's starting to charge for higher tier AI usage inside Workspace. They're introducing a paid add-on called AI Expanded Access from March 1st, 2026. The way Google frames it is that basic AI features stay included in most business and enterprise plans, so everyday stuff like help me write in Gmail or summaries in Docs doesn't suddenly vanish. But if you're a power user who wants higher usage limits on the more advanced features, you'll need the add-on. Whilst I'm not convinced that means the free trial AI era is ending, Google's latest move signals a transition to a more disciplined, usage-based model for the enterprise. Moving over to hardware now, Cerebras just raised a frankly enormous $1 billion Series H round, putting it at about a $23.1 billion post-money valuation, nearly tripling its valuation in a bit over 4 months. Cerebras is one of the more interesting NVIDIA challenges because it's not just making a slightly different GPU, its thing is wafer-scale engines, basically the world's largest single silicon chips using an entire wafer as one giant processor. The research notes these WSE chips are 56 times bigger than a typical GPU, and the latest WSE3 has more than 850,000 cores on one wafer. The round was led by Tiger Global, with backers including Benchmark, Coatue, and strategically AMD as well. And there's one detail that really matters. Just weeks before the fundraise, OpenAI did a deal to procure Cerebras hardware for model inference. If OpenAI is willing to run inference on your kit, that's a serious validation. For me, this means we're watching the picks and shovels phase of the AI boom play out in real time. NVIDIA is still the default, but the demand for compute is so high that credible alternatives get a lot of attention and funding. More competition here could mean better availability and eventually pricing, which helps everyone downstream. The pressure now, of course, is execution. It's one thing to build mind-blowing silicon. It's another to build the ecosystem and the sales machine that convinces enterprises to switch. Finally, this year's Super Bowl felt like a bit of a turning point for AI advertising, not because AI appeared for the first time, but because the messaging got sharper and more openly contested. One thing that stood out, the AI companies weren't just showing off features, they were competing on positioning. Anthropic ran a Claude ad that basically made one clean argument that ads don't belong inside AI conversations. It's hard not to read that as a direct swipe at the whole idea of ad-supported chat, and by extension, an obvious swipe at OpenAI. OpenAI, on the other hand, leaned into the build with the AI story that you can just make stuff now and put the emphasis on tools like Codex. Second, I wasn't limited to the AI ads, it was everywhere. TechCrunch pointed out that this year pushed last year's trend further, with brands using AI both as the thing they're selling and as part of the look and feel of the commercial itself. And Business Insider went further, saying nearly a quarter of the ads either referenced AI or used AI tools. So, AI is starting to become a default language brands reach for, whether they're selling software, phones, or yes, vodka. Third, the backlash is real, and viewers are basically playing Spot the AI. The Verge Roundup was pretty blunt about it, highlighting a noticeable jump in AI-generated or AI-looking ads, and the reception wasn't great. A lot of it came off as cheap, sloppy, and creatively thin. And there's a weird meta effect now. Even ads that weren't AI-made got accused of being AI just because the visuals felt a bit too synthetic. You can't win. That feels like a genuine cultural shift. Gen AI aesthetic is starting to register as a warning sign, not a flex. And finally, the measurement game is changing in real time. Axios reported that X rolled out a real-time Super Bowl ad tracker called Brand Ranks, measuring engagement and sentiment as the ads aired, which tells you what the new Super Bowl meta is. It's not just win the room, it's win the timeline, and ideally win it with the right emotion, not just attention. But for me, the Super Bowl has a funny way of doubling as a market sentiment indicator. When a new tech wave is so confident it's buying the most expensive, most public ad inventory on earth, that's often a sign we're late in the hype cycle, the we've made it moment right before reality shows up with a bang. The classic example is this so-called .com Super Bowl in January 2000, when a huge share of the ad slate was .com brands spending millions to look inevitable, and the bubble deflated soon after, with several of those advertisers folding within the year. And we've seen a modern rerun. Super Bowl 2022 got nicknamed the Crypto Bowl because exchanges and platforms splashed out on big glossy ads. And then the sector slid into crypto winter with major players like FTX collapsing later that year. The point isn't that Super Bowl ads cause crashes, it's that they're a loud, expensive symptom of peak confidence. When an industry starts paying 8 figures for 30 seconds just to announce, we're the future, history says you should at least check whether you're watching innovation or a warning signal. Maybe we are in an AI bubble in pockets, but the optimistic case is that this isn't just hype. Unlike past manias, a lot of the spend is building real, reusable infrastructure, chips, data centers, software platforms, and it's already translating into meaningful revenue for key players, which suggests real substance under the story. Time will tell, of course, but I'm in the mindset of AI is here for the long run, regardless of short-term volatility. That's all for this week's AI Roundup. If you found value in this breakdown, please leave a rating and hit subscribe. See you next week.